Good morning, and thanks so much for tuning in. You're watching Trade Talk on BQPrime. My name is Alex Matthew, and with me is Hiral. Morning, Hiral.
Good morning, Alex.
Well, look outside the window because what you see is likely what is going to determine the course for the Indian economy, at least for the near term. And that is primarily because there are expectations building that we are going to be seeing a significant deficit when it comes to the monsoons in this year, July to September.
Absolutely, because it seems that the monsoon in terms of August is what is causing this deficit, though we've seen like good showers in the month of July.
So, spatial distribution is what is more important to bear in mind. And there are reports that have come out in a couple of publications. Reuters published a report, source based. There's also a conversation with the IMD in the Mint that talks about a deficit in the July to September period. 8% is what is being spoken about. And this is the driest monsoon for a period of as many as 8 years.
8 years.
So, what is being spoken about is the implication of that. And there are a few piecemeal reports that you can see in various places. And also, what the government is doing should be seen as a sign because they'll obviously be getting the latest updates. You've already seen measures that have been taken to curtail exports in certain key agri commodities. And there's an expectation that sugar also will come into play.
Absolutely. In fact, overall, if you see an impact with regards to pulses, rice, sugar, vegetables, as you're mentioning, rice, we've already seen a minimum export price that has come in with regards to rice. Now, we did have a chat with KRBL as well as LT Foods yesterday. Sugar, this will be the first time exports could be banned in 7 years, right? So the government has been proactive, taking into consideration the way rainfall is. And I think that's something which will actually have an impact on the macro as well from an inflation perspective.
Certainly.
So that's something which we need to watch
In
out
fact,
for.
speaking about sugar, there is yesterday's price in the futures market globally. You had a 2-month high.
Yeah.
So it hit a 2-month high because globally traders are anticipating that with the signs that the government is showing for protecting the domestic prices, they've already had measures on rice and a few other commodities. They could, in fact, announce measures on sugar as well. That hasn't come into play yet. But speaking about inflation, you've had the Reserve Bank of India take into account the fact that food inflation has in fact gone up in the recent past, and it is likely to be elevated in the near term as well. If you remember, in the last policy, they have adjusted their inflation projections. In fact, 2 policies in a row, they've adjusted their inflation projections for the current financial year.
Absolutely. So I think the macro side of it on the back of the deficit in terms of rainfall, this is going to be one of the key monitorables going ahead over the next 2 to 3 months to see how the macros pan out on the back of the same.
So that's obviously going to have a bearing on the equity markets as well. But at least for now, yesterday what we saw was that same relatively narrow band for the Nifty 50, 110 points or thereabouts, and we've ended around that midpoint of the day because towards the end of the session, particularly in the last half hour, Hiral, while that Reliance AGM was going on, the price fell quite precipitously. In fact, it ended off the day's low, down about 1%.
Absolutely. Reliance did have a major bearing in terms of markets yesterday. I mean, as we know, 9 to 9.5% is the kind of weightage, right? And the expectation also, we'll get to that in terms of what analysts are expecting in terms of the AGM. But let's quickly look at the key numbers we should be watching out for in terms of the markets. Taking cues from yesterday, we have Nifty, which ended above its support of 19,286, right? Now, that also happens to be the 50-day EMA level for Nifty 50. There is strong support coming in at 19,250 to 19,300 levels. And if you see from an options perspective, the highest call OI has been seen at 19,500 and the put OI at 19,300. So 300 to 500 is that broad range we should be watching out for as well. In terms of Bank Nifty, it's interesting to see how we've seen a good and a sharp pullback. However, this is not expected to result in a trend reversal that markets were actually watching out for. We have supported 43,850 to almost 44,000. Resistance is at around 44,900 to 45,000. However, the range of consolidation for Bank Nifty is that 1,000 points between 44,000 to 45,000, right? Now, from there on, what analysts are saying is that focus on stock selection and maintain a hedged approach as well from here on. Now, the risk aversion is something which is expected to continue, and that is going to be the preferred theme from here on. So, interesting numbers, interesting range. It is narrow, as Alex has been mentioning, and there is constant consolidation, but it seems there is it's very divided, where some are saying that the consolidation is towards the positive, and some analysts are of the opinion that the consolidation is towards the negative side,
well,
right?
yeah.
So we need to see which side do the markets stride. And one of the key to this is going to be Reliance in today's session on the back of the commentary we've got from the AGM.
Absolutely. And I think a lot of people were expecting big ticket announcements in the AGM yesterday. I don't think that came through. We were talking about it yesterday morning. We were talking about the possibility of an announcement for an additional stake sale in the retail division, the possibility of the listing of retail as well as Geo separately. None of those announcements came through. Any commentary on JFS was being sought. Even that didn't come through. But one big takeaway was, of course, the elevation of the three children to the board of Reliance Industries, Hiral.
Absolutely. The succession plan, as we spoke about yesterday, that is something which they did speak about. Updates with regards to where the new energy business goes, that is something which was given out as well. The solar gigafactory plan was spoken about. In terms of Reliance Retail, they've clearly indicated that from here on, they are expecting more fund infusion to come in, investors to come in terms of Reliance Retail. So yes, whatever announcements did come out from Reliance, AGM were pretty much on the macro level, right? The nitty-gritties that everyone was watching out for was not given out. There was no major strategy that was discussed at the AGM. Yeah. And that was the interesting point that analysts that I spoke to post the AGM also indicated, where that now, basis this, in today's session, there is a possibility, because it's not met expectations in terms of the commentary, you could see a downtick in terms of the stock price, at least in terms of today's session. And that could have a bearing in terms of Nifty 50, right? So a Geo Financial Services as well as a Reliance gap down opening in today's session, maybe not a major downtick, but yes, a 1 to 2 or 3% kind of a fall is what we could see. And that could impact Nifty 50 as well. So that could help us to that would help markets to actually inch lower from here on.
So I have a question, because, and this again was being debated in the newsroom yesterday. Based on recent valuations, you're talking about the retail business that is valued at about 8.2 lakh crore.
Which is almost 50% of Reliance market cap.
So how does that, and I'm sure you spoke to the analysts yesterday about this, how does the sum of parts valuation take place?
So the thing is, what they are looking at is, but it was an interesting conversation there, where if Reliance Retail is 50% of Reliance's market cap, which is 50%. The remainder, out of the remainder 50%, even if you have to look at Geo and match it to Airtel's market cap, which is
around
somewhere 5 lakh crores, right? So that takes, Geo will take away another 5 lakh crores. So the core business is with around 3.3 lakh crores in terms of market cap. Now, what analysts are saying is, which means is that the business is undervalued right now, and there is absolute great potential to see a valuation uptick to come in terms of the core business. So that was the interesting takeaway for me as well from the entire conversation, where the core oil and gas business is undervalued. However, there is great potential with the kind of plans that they already have.
So, and it's interesting considering that a large part of the revenues and a large part of the profitability also comes from the traditional O2C business. And it's valued at the least at around 3,000 or maybe even less than that, considering that new energy is also coming to the picture. But we'll see how markets read this and how Reliance Industries reacts in trade today. That's one stock, of course, that could have a bearing on the market. We also have a large pharmaceutical company that we're focusing on at the start, and that's Sun Pharmaceuticals, on the back of its key updates from its annual general meeting. And we've got Varsha joining in to give us the key takeaways there. Morning, Varsha. What are you picking up?
So Sun Pharma had an AGM yesterday. So here are the quick highlights that one needs to look out. Now, the company aims to spend 7 to 8% of its sales in current fiscal on research and development activities as it looks to further strengthen its product portfolio across therapeutic segments, while it spent about 2,400 crore on R&D in 2022-2023, which accounted for almost 5.5% of the sales. While the company is expecting high single-digit consolidated top-line growth for FY24, as all businesses are well positioned, the company continues to focus on improving manufacturing efficiencies and optimizing cost. Also, AGM addressed about the global pharmaceutical spending, which is projected to grow by a CAGR of 3 to 6% between 2023 and 2027 to reach a total market size of almost 1.9 trillion US dollars. Now, the growth is expected to be primarily driven by the introduction of novel medicines. Uh, this will be offset by the loss of exclusivity and the lower cost of generics and biosimilars. Also, the domestic pharmaceutical market is expected to reach at 35 to 39 billion US dollar by 2027, recording 7.5 to 10.5% CAGR, led by demographics and lifestyle changes, rising per capita income, growing incidence of chronic ailments, and increasing access to modern medicines. Also, if you see, there are many products of company which are under phase 2 and phase 3 trials. And also, we had this early market news where Sun Pharma gets US FDA approval of tofacitinib tablets, that is 5 mg and 10 mg, which is for arthritis. Now, market reports indicates that the global tofacitinib market is expected to grow at 13.4% CAGR growth.
That's an interesting number to watch out for. And as we know, the pharma pack has been in focus as well, right? Yeah, we did see some bit of profit booking that did come in on the back of the surge that we saw. But it's going to be interesting to see how the markets actually react to the FY24 guidance that has been given by the company. Thank you, Varsha, for getting us the details with regards to Sun Pharma. But moving on, another stock that was absolutely seeing a lot of action in yesterday's session was a Piramal Enterprises.
5% higher.
Absolutely. The up move was pretty strong. The volumes were also pretty strong in terms of Piramal Enterprises. In fact, they did have their investor day yesterday, on the back of which a couple of brokerages that have come up with reports with the key takeaways of the investor day conference. Rishi standing by to get us more. Rishi, good morning. What are you picking up in terms of the key things that we should focus on for a Piramal Enterprises basis the investor day yesterday?
So as you said, the stock was really active yesterday. It was up by 4.5% and the volume was at 1.8 times its 30-day average. And this also came because of the upcoming investor day as well as the buyback announcement that came in. The dates for the buyback were fixed at August 31st and it is expected to close on September 6th. But moving on to the investor day specifically, the management reiterated its target of a 70:30 OM mix by FY28. And it is also targeting an OM CAGR of 15% up till FY28. Now, the focus on the retail side would be on multi-product offerings without competing with large banks as it tries to increase its focus and expand more in Tier 2 and Tier 3 cities. While on the wholesale side, it's going to be focusing more and more on real estate as well as corporate mid-market lending. Now, first we come to MK. MK maintained its buy rating and with an unchanged target price of 1230. It was positive after the investor day. It said that it was that Piramal Enterprises was on the right track to deliver profitable growth, and also the optimum utilization of capital came as a great comfort for MK. Apart from this, it also emphasized that the alternate assets to grow to $3.5 billion by FY28 compared to the $1 billion that was there in the previous fiscal. Now coming to Jefferies, on the other hand, it maintained its underperform rating with a target price of 920, and it felt that the risk-reward rating was unattractive at the current valuations. It also felt that the low interest, with regards to the existence of low interest earning assets, the higher operating expenditure will likely cap the return on assets to under 1.5%. compared to the target that the company has given regards to a ROA of 3% by FY28.
So diverging views there, interesting.
Yeah.
And one of the stocks of the day yesterday, we'll have to see how the reaction is today. There was some buzz also about integration with Geo Financial Services or partnership on certain activities, but I don't think any announcements no announcements came to that effect. And like you said, buyback is also something that could have had a bearing. Let's also talk about steel, because long products pricing, there are a few trends that are emerging. It seems like the companies have raised prices at the factory level but they have not managed to push it through into the market.
Exactly. So the listed price for long products was increased by about 15% at the start of August. But what happened is the market hasn't really absorbed it. The increase in the market has been come to only about 2%, which with the company selling at a discount because of a lack of demand. Now, long products, to understand, they are as for some examples would be the rebars or the TMT bars that you would see that is being used in construction. And some major players within this long products would be Tata Steel, JSW Steel, and Jindal Steel. Now, but the important thing here to focus is that the fact that they aren't able to push those high prices is because the market is primarily dominated by a lot of unorganized and local players who try to make this steel at a much cheaper cost, so the margins also get affected for these companies. And as we see, the prices have been really absorbed as much as the companies would like to. And according to some industry sources that we got, the prices may be again hiked in September. The attempt may be done again, but we'll have to look at whether or not the demand recovers and whether or not the prices actually.
And so Rishi, help us understand this price increase that was taken in August and the one which is anticipated in September as well, which the markets have not absorbed fully, right? Will that have a bearing in terms of the margin profile of the companies?
It may have an impact, but the other part to look at as well, what managements are also commenting, is that the costs are expected to also decline. The coking coal costs, if you look at, they are declining quite a bit. So although I think again the prices it may be difficult for them to recover, but in Q2 their margins may decline further, is what the managements are saying. But the second half of the fiscal is expected to be much better, with the prices may also recovering. So that is the expectation right now.
Has there always been a challenge for companies that manufacture long products to push prices through on the higher end because of the nature of the market?
Yeah, because as I said, it is dominated by local players who make the steel based on scrap steel, which is a much cheaper product compared to the ISI certified products that these companies make. So it has been difficult as we compared it to flat steel, which is mostly used in automotive product. It is based on contracts, and those products have a much higher margin. So it's much easier to push.
Players will be the sufferers, and the unorganized market is the one who will probably see some good the regional players will be the
in the long steel market.
Absolutely. Thank you, Rishi, for getting us the details. So watch out for the metal space, specifically the steel oriented companies pretty closely in trade, specifically from a second quarter perspective, I think. But the next line of conversation we should be doing on this one, Alex, is as to from a valuation perspective, that if this is on the cards and if the second half of the year is expected to be good for them, where do valuations stand, and are these good times to invest?
But there's also the cyclicality of the sector, which is something that has been displayed over the last couple of decades as well. And if we're talking about a slowing China, the latest update is, of course, the lowering of the growth expectations to 5.1% from 5.2%. I know that's not a very significant number, but for the second largest economy in the world, that is also saying something.
But again, the domestic demand is a little stronger than the other regions, right? So, I mean, a lot of factors to consider for this one. But let's move on from here to the kind of bulk and block deals that we have been seeing in the market over the last couple of trading sessions. Yesterday, again, a whole host of them, from a Geo Financial Services to a Zomato. Himanshu is standing by to tell us more in terms of who have been the key buyers, because once you sell, I mean, it depends on, I mean, you become irrelevant somewhere in the market, right? Hi, Himanshu, let us know what you've got.
Right. So markets remained very active yesterday, and a lot of the buzz was created by Zomato. So starting off, the company saw a whole host of these trades, with Tiger Global selling its residual 1.44% stake in the company, and Apollo Asia also selling almost 4 crore shares. These trades were executed for an average price of about 91. Among the buyers of Zomato shares were Morgan Stanley, Goldman Sachs, Societe Generale, and BNP Paribas, Kotak Mahindra Mutual Fund. Now, this follows after the 12-month lock-in elapsed after Zomato had issued fresh equity shares for its consideration of acquiring Blinkit. The shares of Zomato were up 1.5% yesterday. Coming on to Strides Pharma Science, Shashun Enterprises sold 2.3 lakh shares, which were on the other side acquired by Morgan Stanley Asia for 438 apiece. The stock closed about 0.75% lower yesterday, but the stock has been 45% higher in the past 6 months. Then coming on to Star Health and Allied Insurance, 3 entities, ROC Capital, Madison Capital, and University of Notre Dame, on Monday sold shares of this company for aggregate total of 1,312 crores to open market transactions. FIAM Emerging Markets Opportunities Co-mingled Pool bought 32.45 lakh shares, which is about 0.6% stake in the company, and ICICI Prudential Life Insurance also purchased 39 lakh shares of this company at an average price of about 610 apiece. Now, we talk about the bulk deals in the market, wherein we saw two ones where we had Ratan India Power, where ABARC AST 002 Trust sold 4.4 crore shares at a price of 5.6 apiece, aggregating up to about 25 crores. And the stock also closed 2.8% up yesterday. And lastly, we have 63 Moon Tech, where Gazania Advisory sold 3 lakh shares of the company for about 359 apiece. So these are some trades to watch out for, and let's see how the market's price in the action.
All right. Thanks so much, Himansh, for that. In fact, quite a lot of the action was done yesterday as well, where you saw the reaction to some of these trades take place. Zomato, of course, was expected. We haven't yet seen SoftBank make a move.
Absolutely.
So we'll have to see if that
Interesting how
pans
that
out in the coming days. But let's focus on some of the news that has come in overnight after market close. And we've got Saloni joining in to tell us some of the details here. Saloni, what's on your list today? Morning.
Morning. So first, we've got two IT companies are in focus today. So the first one is LTI Mindtree, which announced its strategic collaboration with Cast AI, which is a software as a service company that specializes in automated cost optimization for customers. This partnership will help companies save on average over 60% on cloud costs as they modernize legacy applications for cloud migration. This collaboration brings together LTI Mindtree's Infinity platform with Cast AI's cloud cost optimization platform to provide enterprises with a complete view of their cloud portfolio. Then the next one is TCS, which was named as a leader in Everest Group's peak matrix for identify and access management services. The report evaluated 21 leading IAM service providers who offer highly tailored security services. The report states that TCS's active investments in identity data aggregation and analytics and experience of delivering customer identity and access management engagements could benefit enterprises in securing their digital identity ecosystem. Then the other companies that are in focus today are Gokuldas Exports and NBCC India. So coming to Gokuldas Exports first, it entered into an agreement to acquire Atrico Group through its wholly owned subsidiary. The equity value of this transaction is $55 million, and the same will be funded by a mix of debt and internal accruals. This transaction is expected to close by the third quarter of FY24, which is between October to December. And the other stock, as I mentioned, is NBCC India. So the company received a work order worth rupees 66 odd crore from the Indian Medical Association for planning, designing, and executing of IMA house at Indraprastha, New Delhi. So the contract is for project management consultancy on a deposit work basis, and the time period for the execution is around 30 months.
Thanks for getting us the details. So I think a whole host of companies we should be watching out for as well. But apart from this list, a lot of other companies that will be in focus as well. And the list looks like, say, a KRBL, Schaeffler, HAL. These are few names that one should be watching out for in today's session. We'll have Mika who will get us more on this. Mika, good morning. What do you have for us?
Good morning. So first we have KRBL, whose board has approved a 325 crore rupee buyback, where the company will buy back up to 65 lakh fully paid up equity shares, which represents 2.76% of the company's total equity share. The buyback price is fixed at rupees 500 and will be carried out on a proportional basis via the tender offer route. The record date was set as August 25th, and the buyback will open on August 31st and will close on September 6th. And the last date of settlement of the bids on the exchanges is September 13th. Next, we have Schaeffler India, whose board has approved a 100% shareholding acquisition of KRSV Innovative Auto Solutions, also known as Coors. The target company belongs to the automotive after-sale B2B e-commerce industries and supplies over 7,000 plus workshops and has a portfolio of 1.8 million parts from various manufacturers. Schaeffler India has entered into a share purchase agreement with Coors and for 100% cash consideration, and the cost of the acquisition is set for 142.4 crores. The acquisition will tentatively get over in the third quarter of this calendar year, and it's in line with the company's India strategy for growth. Next, we have Hindustan Aeronautics. The company has received a notice from both BSE and NSE. The notices impose a 5,36,900 penalty each for the quarter ended on 30th June for the non-compliance of Regulation 17(1), which is in respect of composition of the board of directors due to insufficient number of independent directors. In this regard, the company has stated that since the firm is a government company under the Ministry of Defence, the appointment of the independent directors have to be done by the Administrative Department of India. So Hindustan Aeronautics has stated that it had sent out multiple requests to the Ministry of Defence to fill out the vacant spots, but nothing had been done. And since the matter is beyond their control, they have applied for a waiver of the fines. And in a scenario where the waivers are not granted, there would not be a material impact on the company with regards to the penalty. Then we have Davis Laboratory, whose director and whole-time director, Madhusudhana Rao Devi, has submitted his intent to retire from both positions on account of his age and health situation, and the resignation was with immediate effect from yesterday, August 28th. And lastly, we have Hindustan Construction Company, who has informed that it is in exclusive discussions with Damitio Bard, which is a France-headquartered construction and real estate player, and the discussions are in relation to the possible sale of HCC's material subsidiary company, which is Steiner Construction, which is involved in the area of real estate development, construction, digital transformation, and financial initiatives. While Steiner does have an India subsidiary, the company mainly has a large presence in the Swiss real estate area because it was acquired in 2010.
Interesting. Thank you so much, Mehika, for getting us those details. We've discussed a whole host of stocks, and in fact, we started the conversation today on macros. We are reaching out to the Indian Meteorological Department to get some sense of the latest updates from there. And so you should stay tuned and watch this space in case you want more details.
And with this macro, another whole host of AGMs that are happening, I think a quick list on your screens as well, from a Maruti Suzuki to ONGC, SBI Life, Karnataka Bank, Jubilant Foodworks, Equitas Small Finance Banks. These are few of the names that one should be watching out for as well on the back of the AGMs.
Absolutely, and some very big names. All right, so that brings us to the end of this edition of Trade Talk. There's lots lined up over the course of the day. You'll find all of that right here on BQ Prime.